Hi, welcome back to the Invest in Value channel. I'm Victor, and in this video, I'm going to be talking about Strategic Education Incorporated. Before I do so, wanted to ask you for a big favor. Please like my video. Consider subscribing if you'd like to see videos where I analyze companies and share with you the intrinsic value that I'm seeing with those companies and reasons why I decided to invest or maybe sell that stock. Now let's get into Strategic Education Incorporated. This company is in the private sector and does higher education. So they compete with universities, but they tend to specialize in particular areas. For example, nursing. They tend to think of occupations and then gear the education to prepare students so that they graduate and then they seek employment effectively. They are a profitable company. They generate free cash flow, which it caught my attention. One of the things that I like about Strategic Education is that they are a good diversification play for me. I have a portfolio of stocks and I have plenty of software companies, I have energy companies. I try to go into industries that I can understand, and I can find companies that are profitable, generating free cash flow, and I can buy at a discount. But this is the one company that I was able to find that is doing higher education and I thought was worthy of investing. So let me tell you about it. Looking at where Strategic Education is traded, it had this year to date, it's gone up in value, up in price, which is great because my portfolio is staying ahead of the S&P. It's good because the S&P is down. My portfolio is up this year. And, it's companies like STRA that are helping my portfolio be in the positive when the S&P is really in the negative still year to date. And you can see the chart here that year to date, it's done well. I've owned STRA for over a year. And, over the course of a year, the stock is down. It's down 25%. And again, bad news to some people is good news to others. And for me, if I believe in a company and feel like, hey, it has a particular value and I see the stock price go down, it's an opportunity to buy more shares. As Warren Buffett said, whenever there is a correction or a stock goes down in value, it's discounted and you shouldn't leave the store when they're selling you the merchandise at a discount. If you believe in the merchandise, you ought to buy more, which is what I try to do. But first, it comes with analysis, understanding the business, and understanding that, hey, I believe in this company and I believe it's discounted. So a couple of things to point out. They pay a nice dividend, 3.5%. So this company is, appreciating this year, 2022, and paying a discount. So that's great. PE is a little bit high, 30, but it is a growth company. They're growing at 11%. And it's a small market cap, 1.7 billion. So it's one of these small caps. As promised, my channel is about finding companies that are discounted, and most of them are small caps. So this is consistent with that promise. All right, so let's move on to taking a look at the intrinsic value of this company. Okay, I ran all the financials that I got for STRA, and these are updated for year ended, December 31st, 2021. And here's what I came up with. First I'll point out, if you value this company just strictly on their dividend, they would be priced almost fairly. They price, if you just value them on dividend, at $57 a share, but they're trading at $68 a share. And I believe it's a little bit higher today. The market was up today. My number is from Friday's close. But moving on, here are the factors that I used when I valued this company. I used a discount rate of 7%. This is a solid company, but it's on the smaller end, so I used 7% discount rate. Historically, this company has grown revenue at 27%, and it really shows that these guys are really operating their business well when they're continue to grow the company, and that's over 5 years. Over 5 years, they've grown free cash flow of 32%. I love free cash, and these guys are making that happen. I established a long-term growth rate of 11%. It's 11% is a little bit conservative. But as you get out into the outer years, like year 10, 11, 12, it maybe is a little bit over optimistic. I think education will continue to grow, and these guys will continue to grow and fill the need for education of the new generation. There are a lot of things that, the old school universities, the ones that I went to get my bachelor's and my master's, I think they're a little bit behind the curve of what's going on in the world. STRA, since they're, a private company, publicly traded, they can make decisions on what they're going to teach. So I believe they'll grow faster than public universities. They'll be able to really adjust to the needs of students. So that's why I believe 11% is reasonable. I used their free cash of 131 million, again, off of their financials for the year ended December 2021, and that produced an intrinsic value of 2.246 billion. The market cap is 1.7 billion. So this company right now you can buy at a discount. Specifically, if I divide the intrinsic value divided by number of shares outstanding, I calculate that the intrinsic value per share is $89.73, and they're trading at $68.30. So there's about a 31% discount on this stock. Again, I'll remind you, you get a 3.5% dividend, and dividend stocks are really nice to have in 2021. A lot of volatility. If the S&P goes sideways for the year, it wouldn't surprise me. It's going to go sideways, but it's going to be ups and downs, ups and downs. And if a company is returning 3.5% of capital back to you, it's good to know that, hey, I'm going to have some kind of cash flow coming into my account this year, as opposed to, if you had a stock that maybe was down 5, 10% and didn't have a dividend, that wouldn't feel as comfortable as maybe a stock that did produce a dividend. So that's my analysis to get to intrinsic value. Let's move on to a summary. All right, so to review STRA, let's take a look at performance first. First, year-over-year growth last year was 10%. I think it's going to be higher than that. Part of it is that, you were coming off of COVID restrictions in 2021. 2022, pretty much all restrictions are pretty much gone. And I think a lot of students are returning to campuses. I have a senior in high school that's applied to colleges, so I've stayed kind of up to date on what's going on, and applications to universities are at all-time records. They're receiving far more applications this year than they did 2 or 3 years ago. So I think the demand for higher education is there, and I think STRA is going to benefit from it. Last 5 years, their growth rate was excellent at 27%. So I expect them to grow at 11% or better. They have good free cash flow of 131 million of free cash flow in 2021. I don't see that changing. Their growth, they've grown their free cash flow by 32% over the last 5 years. Their cash balance is good at 262 million. That's 17% of their market cap. They have, if you compared it to their total liabilities, the 262 million it covers 48% of their total liabilities, and they could pay off all their liabilities over the course of 2 years. So I believe a really strong balance sheet. STRA is going to be around for a long time. Moving into guidance for 2022, STRA management didn't provide specific guidance of what they're targeting, from a revenue standpoint or earnings per share or anything like that. But they are optimistic on 2022. I would say that they did raise the dividend and have committed to that dividend. So for 2022, we could expect that 3.5% dividend. And I think I mentioned earlier, post-COVID, the number of applications to universities and higher ed and occupational education, it's just off the charts right now. I think this company is going to surprise to the upside in 2022. My outlook is, again, they're going to grow 11% in 2022. They're in a fertile market right now in higher education. And STRA provides diversification to my portfolio. It's the only higher ed, company that I have. I don't have a giant position in it. I have a good position. I believe in the company, but it's good to have a company like this. I think I showed the chart earlier where this thing was going bucking the trend at the beginning of 2022, where a lot of stocks were going down. Super high quality companies are going down. Google, Microsoft, and those guys were going down. Meanwhile, STRA was going up. So it's good to have diversification so that you don't completely lose, on every single position. Some positions win when everybody else is losing. STRA, along with my energy stocks, have really helped me in 2022, stay ahead of the S&P. I'm positive for the year, knock on wood. The S&P is still negative. I'm ahead of the S&P this year, and I kept up with the S&P last year as well as the year before. So just in review, what am I going to do with STRA this year? As I do with every company, I review it every month, and then when they have an earnings call, I really just pick through that earnings call. I really look at their earnings release and make sure that, hey, are they sticking to their business plan? Are they executing on that business plan? Is, the growth objectives and how they're going to grow, are they executing that plan? So that's really important to me. And based on that information, I'll either decide to invest more, hold my position, sell some shares, or completely, close that position. I closed 2 positions today with companies that, I've owned for, one I've owned for more than 2 years, great little company, but their earnings for 2021, they just didn't, they really confused me. It was just a departure from where they were before, and I don't want to be confused. I'd rather be out of the position. So I closed that position with not too much loss, and then I closed another position with a real nice gain. The company price is well above where I think the company is valued, so I closed that out with a good gain. And again, that's what I'll do with these positions. I expect this company to rise another 31%, and then I have to start making decisions on when to exit this stock. So just please let me remind you that this video is for entertainment purposes only. I like to share my analysis on a company, what I'm doing with a company, but it's really for entertainment purposes only. I'm not giving any recommendation to buy or sell any stock or security. Please, weigh your options out there seriously, and I'll wish you the very best of success as you make your decisions on which investments are right for you. I hope you hit home runs this year.